Good old Abraham Lincoln, day trader and president. Hey everybody, it's Saturday. Explains why my hair is all over the place and why I'm still like... Anyway, I've never done this before. Today I want to talk about an indicator. It's Saturday Indicator Day. How about that? I've always had a fascination with the RSI, the Relative Strength Index. Not the CSI, the RSI. The RSI was invented in 1861, this is true, by Abraham Lincoln. No. Actually, for real, it was created by Wells Wilder, real estate developer and day trader, guy born in the 1930s, who one day woke up and he told his wife, "I think I'd like to start trading cryptocurrencies." And she said, and this is a direct quote, "Get out." Anyway, Wells Wilder, by the way, is not related to Laura Ingalls Wilder, the star, founder, creator of Little House on the Prairie, which incidentally also starred Melissa Francis, star of Fox Business News. So now we've come full circle back to Wall Street. Anyway, let's take a deeper look at the Relative Strength Index. The Relative Strength Index is calculated by taking the average gain of up periods on a specified time period and then dividing that by the average loss of the down periods on that time frame. In other words, math. Boo. The RSI simply, in other words, is a momentum indicator. When it's traveling upward, the bulls are in charge, and when it's traveling downward, the bears are in charge. Anyway, here are 5 ways that you might consider using the Relative Strength Index. So first of all, when price is moving up and the Relative Strength Index has crossed above the 60 mark on your chart, you might consider maybe buying on momentum, buying through breaks of high points on the chart. Or when price is moving downward and the Relative Strength Index has crossed the 40 mark, you might consider selling on breaks through lower and lower levels, or even selling on retracements. The third way you might consider using the RSI is waiting until the Relative Strength Index goes into super deep overbought or oversold territory, above 85 or below 15. So you're really looking at an extreme level, and then trading in the opposite direction. A lot of people would ordinarily look at the 70 mark and the 30 mark for overbought and oversold respectively. But I think using something like 85 and 15 really cuts through a lot of the false signals. And by the way, I think false signals is kind of a weird way of saying just a signal that didn't work out. It wasn't false, it just caused a problem. Okay, the fourth way you might consider using Relative Strength Index is my favorite. And of course, many of you know that divergence is a big favorite of mine. So when price is traveling down, but the Relative Strength Index is going up, price is making lower lows, but the Relative Strength Index is making higher lows, you might look for RSI bullish divergence on a financial instrument that you already love, so that you're getting your favorite stock, or crypto in my case, on sale. For doing this, by the way, I love the 1-hour charts. Okay, and this works in reverse too, especially if you're waiting and watching for a bear market to start. Okay, last of all, you might consider combining the Relative Strength Index with trend lines. Let's say, for instance, that the RSI goes above 70 or 75 or 80 or whatever you've decided is overbought. And then you draw a trend line underneath price. Drawing trend lines, by the way, is fun. And there you go, a little mini course on the Relative Strength Index. Happy Saturday to everybody. I hope you have the greatest day of all time. And remember, I love you so much.